This is my book review of Hedge Fund Market Wizards. It's just a blank book, but so this is by Schwager, and I really enjoyed this book. I thought it was actually a really, really good book if you want to learn about like investing and trading. So pretty much what he does is the author goes around and finds the most successful hedge fund managers and just investors in general, and he goes and interviews them very detailed. Like he spends probably, I would say, 15 to 20 pages of just back and forth, and the whole book is just, it lists the questions that he asks and then the response, and then the question and the response. It's just, that's the entire book. And it's really interesting. And one big takeaway you learn from this is that it's not by copying other people's strategies that you're actually able to, become successful in trading and those kind of things. It's actually by knowing your capabilities, what works best for you, what your risk tolerance is, what your strategy is like in the sense of what works best for you, and practicing with that and then developing that. So it's not through like copying other people, and also there's no like one winning formula. All of these people that he interviewed were successful, and they all approached it from different angles. Some of them like invest in different things. Some people, had a different like kind of thesis on how they invested. And I mean, one of those stories I really liked was, if you remember, I did a book review on The Big Short. If you haven't watched that video, you should go check it out. But The Big Short talks about these two people in Cornwall Capital, which is Jamie Mai, and there's also another person, I forgot their name. But pretty much they were these like kind of very young investors, and they learned about certain trades, and they just had this basic idea of like, we want asymmetric upside in the sense, which means like you have a capped amount that you can lose, and then you have a potential to make much, much more than that. And that was the kind of style they had. And so you actually got to learn more about the trade he made. Specifically, the one that made him quite a bit of money was about Capital One. So Capital One stock dropped a lot in a one day because of a news outlet kind of posted stuff where it said, oh, this company, they announced they're having to like increase kind of redemptions, or I forgot exactly what it was, but it was something where like people thought that the company's integrity was under attack, in the sense they were kind of questioning, are they just a fraud? Because they claimed to have this proprietary system of knowing how to kind of better use information from like credit card data and like kind of from clients, and then use that to make more money. So what Jamie did was like, he went and they actually just called some of the managers and people, and they were just average people. They didn't have any connection. So they were just cold calling. And after, it took a while, as you can imagine, but they actually ended up talking with some kind of person who wasn't like the main person, but who was definitely in those circles. And he was like the chief risk officer or something like that. And so by talking to him, they actually got a good sense of like, okay, they wanted to find out, is the company actually a fraud? Is the management good or bad? Then once they decided that, then they realized that they did their main trading through option strategy. And the thing with the option strategy is that like, the idea is the same. It's like you have a capped amount. The amount you pay is the amount you can lose. You can't lose more than that, which is, you might think that's like seems very normal, but it's not. There are situations where you can lose more money than you actually invested. So downside's capped. And then because of the leverage, you're actually able to potentially make a lot more returns. And so that's what they wanted to do. And so then they realized that the market wasn't pricing in something, in the sense that for Capital One, there was actually binary outcomes, in the sense that it would either go bankrupt, or it would have a lot of fraud cases, and it would be the end of it if everybody was right about the management being, very shady and doing a lot of bad things, or they could be totally right and the stock just went down for no reason because everybody got scared and that nothing had changed. So they bet on the latter case, and they ended up making quite a return from that. They turned $28,000 into over $512,000. And so I think that just showed how accessible a lot of stuff is. And really one of the things I learned from this book is that all these hedge fund, market like people, if you try to win in the short term, let's say you try to make trades every second, every minute, every day, every like hour, every even week, you're most definitely going to lose, because the trends that occur in there, it's very choppy, in the sense that like it's difficult to tell, right? If you're in a river, what is going on, because there's so much like small currents going all over the place, right? There's things happening, but it's like you step back and look at the bigger picture. It's very clear if the river is going in one direction, but you can only tell that if you're really step back, right? Because sometimes you might be in an area on the side of the river, you might not be like in the main part, and things may be going a different direction. There could be a lake that's going somewhere else, right? So only by stepping back and looking at the big picture do you have an advantage. And I think for every average people, the advantage comes from having a longer time frame of investing. So minimum, investing for at least like 6 months to a year before you like sell again. And also just prioritizing, being like, okay, I'm only going to make a couple trades a year, or I'm only going to make a couple trades. And the point of this is that you do more research, have more conviction, and then use that for your trades. Because the problem is like conviction is like your amount of belief in a trade. If you have very low conviction, then that means you haven't done enough research. And also it means you're emotionally not able to kind of take risk. For example, putting down a certain amount of money and then using that to invest, right? To trade. And if you know what you're actually investing in, it's fine. But if you have no idea what's going on and you're just doing it because some friend told you, if it goes down or goes up, you're going to feel so terrible because you have no idea why it's going down, why it's going up. But at least if you do your research, you can tell, oh, the fundamentals are good. It's solid. So even if it goes down in the long term, it will eventually go up. And I think that was a huge, huge takeaway. I think another thing is like understanding what you're comfortable with. A lot of people are like, oh, I want to just make a bunch of money and stuff. And so they start risking a lot of money, but then they feel really bad and this causes their emotions to come into play. Like it really is a test of patience, emotions, also kind of rejecting what other people think, or at least questioning it and doubting it, and then coming to your own truth and doing your own research. And I think the fact that the market is a very binary outcome is really interesting in the sense that like there's actually no emotions in it. You have a bunch of emotions because you lose money and you don't like losing money, and the truth of the matter is it's a very binary outcome. You either make money or you lose money, right? It's very rare that you end up with the exact same amount. And so as a result, it's like you have to learn, and it's a very brutal teacher. And that's why it takes a lot of time. And this is something you can't just rush. I think for me personally, I've known about stocks for like quite a while, and like that doesn't mean I'm super successful, but it's just like that's the background information that you need to know to even just understand some of this stuff. And so it's a very gradual process. But I think that it's something that I really believe that almost everyone can at least pick and recognize what are a solid stock. It doesn't mean you're gonna make a bunch of money off of it, but at least you can pick something that can, maybe lead to more returns over time. And I think when you pull out the investing time frame, and you stretch it out, that's when you realize like most people have no patience, and that's why everybody wants the in and out, in and out, in and out, quick. Because it's like everything. Nobody wants to become a doctor because it takes too long. Nobody wants to become a lawyer because it takes too long. Everybody wants the most amount of money for the least amount of effort, and that's exactly what gets translated over into trading. This is why all these people are selling you these strategies, and the truth is, the reason why strategies fail is because people are different, right? If I told you, okay, this is the strategy, you got to like sell, buy, sell, buy, sell, buy, sell, buy. And even if it goes down, you might lose money, you might go up. Like if somebody who is, let's say, not able to handle that much stuff emotionally, it might be better for them to just like really do a lot of research, buy one thing and just not look at it again, but have the trust that like they did the research and it counted and that's it, right? But like for someone else, maybe they might be better doing the other thing. So it's a very individual thing. And I think the best way for you to do that is to kind of test it out. And I think also a big thing too, in a lot of like finance circles and stocks and stuff, is that just like most of the professionals are just wrong. And I think a really big point is like the reason why the professionals are wrong is because if you think about it, these big funds, they have investors in the funds in the sense that people give you their money, you're supposed to manage it. But these people also want money so fast, so they judge you based on your monthly performance. And if we talk about it, monthly is a very short time frame. A lot of different things can happen in a month. And so it's very difficult to consistently make money every month. And what I like kind of would imagine these hedge funds managers are doing, they're doing the impossible in the sense they're trying to be in that like river where there's all these sorts of different things, right? Like going all sorts of different directions and trying to make sense of it. And it's very, very difficult. But if you just be patient, and like this is most things like, if you just learn to be patient, you will have a huge advantage because nobody can be patient in this world. Nobody can wait. And I think even for me, it's like something like you always have that itch, even if you are patient. Being patient just means that you have more self-control, so you stop yourself from doing things. It doesn't mean you stop feeling the itch to do something, right? Like we all want to become successful right now. We all want that, and we will always continue to want that. But it's like being patient is having enough self-control to limit yourself, stop yourself from doing things that could be destructive. And even though you have that desire within you, you control it. And this is the biggest thing. Like there was some of these big, really successful people, and they asked them, what is the mistake you made? And you can just see how like all of these parts, I'm telling you, human nature is in everything, right? They talked about in the dot-com bubble, right? This guy had sold just at the top, so which means that you pretty much made the most amount of money right before everything went down. And he was sitting there, and for the next couple hours, right, all his friends kept making like a little bit more money because they were just like selling a little bit later. And eventually he couldn't take it. So he bought again. And as soon as he bought, all the stuff just imploded. It started going down a ton, and he lost like $3 billion in the matter of 3 hours, right? And why did he do it? He did it simply because he saw his friends doing it, right? Because if he had just stayed and been patient and kind of rejected the overall like, you know, kind of view of things, he would have been fine. And so it's like in investing, you're able to find your own truth in the sense of like you get rewarded for being right, not for following what everyone else says. And sometimes those are the same thing, but sometimes they're not. So you really have to examine that and take a closer look. And it really just like forces you, I think, to look more into yourself, because you are doing this with a lot of, you know, maybe money on the line that you worked hard to do, hard to get. And yeah, so I really like this book though. I think that like if you're, you know, I think there's a lot of like crap out there about like, oh, do this investment strategy, do this. But by only like learning from, I think, the most successful people, and he has a whole series. He has like 5 of these books, and they're all like kind of on different topics, but they have the same exact thing. They interview a bunch of the top traders, and he does this very objectively, all this stuff. And so I think that's like, if you can learn from the best through these books, you'll be fine. Like, because they also tell you what they use to learn, and if you just do that, you will be in a really, really good position. Because if I think back to pretty much the reason why a lot of people fail is because, one, you don't master your emotions, but also 2, you don't know the mistakes that you're going to make. So in order to learn, you have to lose a bunch of money first. That's pretty much how it always goes. In all these stories, you hear them, oh yeah, I like did this and this and I blew all my money. And then I had to start from zero. And like that happens like to them early on in their career. So it's like if you can learn from their failures first, then you will be able to get a leg up in your own journey. And doesn't guarantee you're going to be successful, but it at least gives you some insight into what they did, what worked, what didn't work. And you always have to be on your toes, right? No situation are you going to be completely certain about, but you just have to do your best and try to choose whatever, you know, system works for you, and really do your research and do your due diligence in learning enough about it. So I'm looking forward to, he has another more popular one. I think it's like 1990s kind of version. And so I'm looking forward to kind of reading that one too. But if you have any other questions, put them down below, and I'll see you in the next video. Make sure you subscribe for more.